Morning, guys. Happy Monday.
Morning, morning.
All right, let's see. Can you guys hear me okay?
Yes.
Yes. What's going on with the camera? There it is. Okay.
Yes.
We'll give a couple more minutes for everybody to join. I believe Shariah should dial in. And hey, Trevor. Trevor, you have the power?
I don't have any power.
You have power. Okay. I think I can do sign in. I'm gonna go back out and come back in and sign in. I think that gives me it just doesn't do automatic, but I may have it. Good morning, Tim. Everybody have a good weekend, good Father's Day.
Yes. My kids came over and cooked for me.
Wow, what a treat. That's nice.
They can cook.
I cooked myself, but I spent a good bit of time at a pretty interesting triple net in Denton. So that was kind of fun.
Oh, good. Nothing better than doing what you love on your Father's Day, right?
Yeah, it's good.
So good. Yeah, we finally went and saw that Mission Impossible. And I didn't expect that. The cinema close to our house, it was full. We literally got the last two seats, me and my wife.
Wow.
My daughters, they did not want to go, and like, okay, let's not drag them. And so I didn't realize it would be so full, but it was completely packed. Still, I think Mission Impossible, it came out like almost a month ago, right?
It did. I saw it a week before.
Okay, yeah.
Me
So
too.
uh yeah, so it was packed. Yeah, it was a good movie. I liked it.
Yeah.
It was
It was
good.
enjoyable for sure.
Yeah. 3 hours is a little long, but
Yeah.
all right, guys, 9:05. We'll get started. Just respect for everybody here. And let's see, we don't have any bots on this one. We typically don't leave any bots here. Okay, I think this is clean. You share my screen. Oh. You know, all these pop-ups, they're always pop-ups. Okay, everybody can see my screen. Okay, assume you can. Welcome, everybody. This is our Monday morning call, market updates and our operations and team updates. So first and foremost, our interest rate forecast on the Fed watch. No changes there, no big shift from last week. Similar, the really no rate cut for July. September, end of this year, market is projecting one rate cut or so. But our personal opinion is, don't count on this rate cut. As week over week, as we have gone over this, you've seen how these things shift as the new data comes out, right? So based on where inflation is, where the uncertainty, the dollar strength, our credit rating, more and more is being manufacturing United States, manufacturing and everything else, which has a inflationary aspect to it. So I think as the data rolls out, I really think no rate cuts this year. If any, maybe one, unless of course there is another black swan event of catastrophic decline in economy, GDP performance, and all those. And of course, the war is these days is such a probability that is always out there. Who knows, that's the stuff happening in the world. So, if that happens and something happens to the economy, Fed may take actions in those cases. So who knows? But for our underwriting and our purposes, we are not really underwriting any rate cuts. 5 years out, definitely some reduction in the interest rate. So we're underwriting bridge. Bridge we are underwriting at 8.5. Bank and credit unions we are underwriting at 7.5. Small balance agencies around 6.5. And regular agency around 5.75 or 5.5. That's what we're seeing on the interest rates, and don't see much changing in the near future. So that's any questions on that?
Hey Sanjay, I
Uh,
think we touched on the rate. Do you mind also like comment on the down payment on each of the type of the loan that is mentioned?
Good point. So how much down payment or leverage typically there can be? So on the multifamily side, even the bridge we used to be able to do 80, 85, 90% leverage. But these days, even on a bridge, 75% is the max. A lot of lenders are not really looking for doing more than that. All the other assets that are non-residential, start with 30% down and then maybe 35% down. And then if you do get a quote that a lender says 30%, go for that. Or if you do get a quote for 25% down. But in most cases, our leverage is limited by DSCR these days than by the actual leverage. Meaning, lender will say, well, yeah, on this asset, we will loan a maximum of 70% or 75%, but DSCR limits to a 65% loan. And what that really means is the property doesn't have a good cash flow, right? So you really need to watch for that. And that's the general trend we're seeing, that based on the increases in taxes and insurance, but not a corresponding increase in the rents, have led to this sort of dynamic where we are getting limited by DSCR on most of the loans. So yeah, so multifamily, mobile home parks, you can underwrite at 75% as long as you're meeting DSCR. All other assets starts with 35, and then as you get an actual code, do 30%. That's kind of the guide. Good question. Thank you, Tim.
Thank you.
And as you see, the 10-year treasury inched up a little bit here, and just really hurts all of us. And not a big jump, but every little jump, every volatility kind of shows that jump. And on a longer horizon, as you look at this, the treasuries are just staying up. And what the treasury staying up really means is, even though Fed may lower the interest rate, if the treasury stays up, our 5-year, 7-year, 10-year treasury that most of the loans fixed interest for 5, 7, or 10 years are based on, those will have a higher interest even though Fed may lower the interest. So that kind of gets fed into that. So debt-wise, the good news is there is a lot of debt available. A lot of lenders they just don't have enough business, right? Because the lending is so slow. So this is a time you can negotiate. You can ask your terms. Don't be shy of, lenders will, a lot of the times will put forward and say, oh, yeah, 1%, one point here, 2 point there. It is what it is. And you say, well, that doesn't work. I really need to make this work, right? And a lot of the times asking a lender, oh, can you do better? Or can you do a little bit different? You're kind of giving them a free rein to say, oh, no, we can't do it, right? Versus what we do a lot of times is once we get a loan code, loan terms, we say, well, I need this, in terms of points, in terms of fees and charges and other things. Agency fees are the ones that are fixed. There's not a lot of, whatever it is, there is no negotiation. Outside of the agency fees and charges, everything else is negotiable. So right now is a good time to negotiate. Like even on, I'm going through some refi on some of the personal stuff. Lender said, oh, appraisal is like $800. And like, that's too high. Why this so high? And they said, oh, wait, we can look at other appraisers. And they end up giving me some credit. Out of where, I don't care. They said, we'll give you a credit. It's going to lower your costs or fees or whatever. At the end of the day, that's the goal. So debt is available and you can negotiate on that. There is this link on this one, Market Outlook, the Fannie Mae website. It does get released. It is usually a couple quarter behind, but historical good read for you to go look and look at that. In terms of equity, similar thing. Equity is tough. What I saw, the cash balance that is in money market accounts, that is one of the highest. It has actually, let me see if I can pull that graph. There was a St. Louis, there it is, this chart, I think. This chart shows, look at this. It is going all the way back to 1950. The cash that is held in money market funds is the highest ever since the 22 that happened, right? So that's been going on, that's been moving, and one of the highest. So goes back to our point here. A lot of money sitting on the sidelines. There's a lot of money available, but the requests, the expectation of returns have gone up. So, we've been underwriting 18, 19, 20 IRR deals, and for multifamily residential, for non-residential and others, you've got to be above 20 plus IRR for most deals. So that's there. Bank debt, very widely available, multifamily debt. There's a lot of debt options that is there. Back to the leverage that Kim asked. On the leverage question, there is the limitation based on the DSCR and all of that. But as we go through the market cycle and everything else that is struggling there, we are negotiating with the existing lenders where we can acquire a deal at 100% loan. And that is the existing loans, right? So even though it's an existing loan, it's a brand new loan, but with the same lender, full 100% financing, and then bring the money for some CapEx, closing costs, and those type of things. So leverage wise, that option is there when you are negotiating on deals that are in trouble right now. So there's quite a few. So I'll look at a couple of these deals as we review the deals there. Let's see the property tour. So the Trevor, so this Thursday there is a tour. You want to talk about this?
So we're doing a property tour of Amberwood Apartments. So I'm going to put it in the chat. It is in Fort Worth from 3 to 4 p.m. And there's a sign up link. ask you to do the sign up link just so we can send updates if there's anything we need to let people know.
Okay, thank you. Manager is already notified. I'll remember to remind them again today. Sorry, I can't. Okay. Austin property tour. This one is on July 16th, the Wednesday. Again, 3 to 4 p.m. on this one. Are you doing this one also, Trevor?
Yeah, we're probably haven't set it up yet, but we're probably going to go to New Braunfels and look at the industrial development there.
Is this too small, by the way, my screen? I'm not sure if I can.
It's pretty
zoom
small.
this thing. Okay, I just realized. I don't know how I zoom. Oh, yeah, yeah, I can do this. Sorry, guys, just raise your hand and I didn't even think. How do I? Ah. There. Okay, there it is. A little better. That's good. Okay, so this Thursday there is the roundtable in Dallas. Austin, there's a roundtable plus the property tour. And then the location is not determined yet, but August 7th, the Thursday, in Houston property tour. Location TBD plus the roundtable that Mike will lead. And the following one is in September. So, you know, add the, pencil those in if any of you are available or like to take advantage of those. Any questions, any comments on these? Okay, that's the link Trevor posted. Okay. I think Amber is still doing this. So that is on the calendar, optional, of course, but for underwriting, we have spent a lot of time with Amber's over the last couple of years, so she is really good. She gets into the really good details for all the underwriting. Pro Money is still there. If you don't have your account, please do that. Equity raising activities. Whale closed and funded 200,000. Last I heard 200,000 was left. Is Chirayu on the call? I don't think he is this morning.
I believe there's 100 still left and he's waiting for someone to confirm tomorrow.
Okay. But as soon as we close this, we will wrap this up, close the books, form the closing, and all the acquisition fees and the GPs and all that gets finalized and distributed right after that. So, yeah, so it kind of stays open and funds don't get distributed until we close this out. Horizon is fully funded through a fund of funds, SPV, special purpose vehicle, SPV, that's what it stands for. I think there is an opportunity to replace some of the other funds, but I think Horizon is fully funded and closed at this time. So next couple of weeks, we will kind of wrap up the accounting, math, and all of that and be there. For our fund of fund, the fund one, the $2 million, it is already closed. And I believe the 1.5 million of this has been deployed already. A big portion of that, of course, was to Horizon. But the rest has been deployed to a couple other projects. So you know, we have this. I think there is some money there left, but Mike is the center and main person for this. This one, another 1.7 million-ish is underway, but it's not finalized and funded yet. And then there is a fund model that we are working on it, where we just raise money and have it available for our deals, especially as we see these distressed deal come in. I'll talk about a couple of those distressed deals here in a second. So we're trying to finalize this. It's gets a little complicated as soon as you get into, you know, not a direct link to a deal. So that is underway. Equity fund, debt fund, we're working. LOI and under contract deals. So let's talk about those. I am going to this. Nope. You know what? Now I have lost my. Oh, there it is. I'll zoom back in, guys. Sorry. I couldn't see. Okay, there it is. So let's look at our LOIs and offers. So, quiet one, funny name here, but I saw a message, Martin and Jana were working. Looks like they are going full swing on their ADA deal. So they're looking to pass this on. I believe somebody in the group raised their hand, but Martin and Jana they've done some of the initial underwriting, initial sizing up of the deal. Deal was looking good, so I think it works at the price they had it at. So let's see, the 2.6 million. So I think it's a good opportunity if somebody wanted to pick that up and take a look. It looks like they did update this. Summer Creek, I think this has been going on for a while. I'm not sure if Sandeep is here today. So we can catch up on this. Lufkin self-storage, that's the one Rob and Mike are looking at. I don't think Mike is on the call there. I don't have an update on this.
Yep.
Uh,
Sanjay, I'm here.
oh, hey, Rob. Hey,
We-
do you
we-
know what's going on to this? Yeah.
Yeah, I think we landed it. I think we're gonna know tomorrow.
Okay, okay.
Yeah,
The numbers are looking positive, looking.
Yeah, pretty
you
good.
submitted LOI.
yeah, we have an LOI in. They countered, we countered. Last time you and I looked at it, you said, don't bump it up much, but just move towards them a little bit. And I think that made them, we did that. And I think that made them realize we were serious, but weren't going any higher. So we are waiting on, the broker told me on Friday, they are waiting on one of the investors to decide what he wants to do. He actually doesn't need or want the money. So his thinking is he wants to just stay in the deal with us.
Oh, okay. Okay. That's awesome. That's good. So we'll leave that there. I know Veteran and the team is looking at this one. Is this actually under, oh yeah, Veteran had an LOI out on this one. A newer deal, but a smaller deal. And I think initial LOI was rejected and Veteran was trying to figure out, oh yeah, look, hey, update. Revising the offer price to 2.1, have to face it on Tuesday, so tomorrow. Good job, Veteran. Keep progressing that. And yeah, so Veteran is working these two together as a package deal, so that's good. I'm not sure Veteran is here to talk anything on this.
I'm here.
Yeah, you have any further update? You have a meeting tomorrow?
Yes. I
Okay,
think that's the only update. Yeah.
okay. Good,
Mhm.
good. Hey, thanks for updating the statuses here. I appreciate that. It helps
Yeah.
in case you can't make it, so that's good.
Yeah.
Okay, so Sajid and team are looking at success storage in Oklahoma. Let's see where the team is at. I'm not sure anybody from that team is working on this, so there hasn't been any updates on this. And I know Sajid was getting busy with something. He had some classes or something come up, so I'm not sure his focus is there. I'm not sure Tiffany is here. Tiffany, are you here? I can't see the attendees today because I have one screen.
I'm here, but I don't know the update on success. Rob,
I thought that Sajid put in an LOI.
Okay.
But
Hey,
I
I know Sujit is got busy with something, right? So he's a little bit sidetracked on something else than these deals. So
That's correct. He's got a lot going on.
yeah, he's been pretty slammed with work.
yeah, yeah. So if you guys want to follow up and if somebody got the contract on this and we want to archive it, that's fine. I don't think it was that big of a 2.7, 285. That's a decent sized deal. This is a storage. So that's a little low. That's like around 15-ish. Oh, it's like a 12,000 a door. That's a good price generally, but you have to get the details. So, okay. So this is another one in Louisiana that Martin and Jenna are looking at. I don't know if they are here, but looks like they have some updates due date for this today. So I'm not sure, but they are moving forward on this. LOI is out. Windrush is the main deal for this team. And are you guys presenting this week, right? These guys are bringing this to the Lions Den, right? Anybody from
presented-
this team on? Hey, Lafayette, go.
Are we talking about Windrush?
Yes, Windrush.
Oh, yeah, we did the Lions Den on that past Wednesday,
Last
and
week.
LOI is in the court of the seller.
Okay.
Hopefully, we'll hear back something this week. Yeah, they said they'll
Okay.
provide feedback regardless, so we'll see.
Yeah, okay. So asking is 7. And offer price. I don't know why this keeps doing it. Okay, so asking is 7, offer is 5.5. So there's a little gap, but you never know. So that's
Right.
good. Under contract currently, Whale is technically closed, just a little last few things. Ada, that's the one, Martin and Jenna, they are going forward. Leisure Acre, that is John and Sharon, I believe.
Yeah, that
so
Leisure Acres, a few of us are going to Alabama, leave tomorrow to check.
oh, you guys are?
Yeah, we're
Go
heading
west,
there tomorrow because we finally got all the paperwork. And there was a little kink before we got it all figured out. So we're heading there tomorrow and we'll be there a couple of days.
I want to see where is this place?
Yeah,
Are you guys driving, flying? How are you guys going there?
we're flying into Huntsville, Alabama. And then we're going to
So,
basically park.
okay. Rent a car and go there. Okay.
Yeah,
Okay.
it is a kind of in the middle of nowhere, but
Yeah, so RV parks, I think that's one of the funny thing is as long as there is something, looks like this RV park may be close to this. Is this a lake? Is this a lake? And whatever the activities and stuff is going on there. So,
it's a mobile home park.
oh,
But
mobile home park. Okay.
yeah.
Okay. Yeah, so, but you guys do have a contract on this?
Yeah, we have a contract. The due diligence period just started a few days ago. And
Oh, okay.
yeah, because it took a really long time to get all the documents we needed before the due diligence period officially started.
Okay.
And yeah, so we're heading there tomorrow and then we're leaving on Thursday afternoon. I have another conference I'm heading to right after, but the rest of the team will be heading home on Thursday afternoon.
So are John and Sharon going with you guys?
Yes, John, Sharon, Kim, Andrian, and I believe Heather.
Okay,
and myself.
okay, okay. Nice, nice. Are you guys set on a contract to close perspective? Escrow monies and all of that? Do you guys feel comfortable? Is somebody, John and Sharon are kind of leading and driving that, right?
This is Kim's project, so
Okay,
well, I have to double check with her. She says she's been
Okay.
working on all the GP stuff and etc. But
okay.
I'm pretty sure she's working closely with Sharon on the.
Sounds good, sounds good. Reach out, let the team know, reach out if need any help, or even a review is good. If nothing else, on Wednesday, 5:30 after the Lions Den, we can go over that. One of us can go over, so.
Yeah, we'll try our best to make, we should be able to make the meeting on Wednesday, but we'll see how reception is and stuff like that out there.
Yeah, yeah, yeah. Good, good. That is great. So outside of this, stuff that we don't have here, okay. So we have this deal, Sherry, that we are tracing. So this one is a distressed deal. Came off market from one of the brokers. It actually started as a brokered deal back in 24 last year. So just kind of an example for this. It came originally in July 24 to us. You know, we looked at it, it was too old. Asking price was too high, just didn't work. You know, if it wasn't working, so we passed. Nowhere even near we were getting there. And then it came back earlier this year now, last month. This one basically, the seller has given up pretty much on the property. They don't have enough money, and the occupancy have dropped down to 68%, I believe, currently. So lender, ReadyCap is the lender, and they're willing to do 100% financing on this. So they're saying, hey, take over the existing principal balance and bring some CapEx money, bring some interest reserve, or buy a rate cap and go to work and see what we can do. This location wise, this is a really good location. You know, it's not a Class A location, but it's in Arlington. And the best part on this one, the reason we were so bullish on this is, so there's this complex. So all of this is this apartment complex here. So it's a huge apartment. But a few years ago, this apartment complex here, I was actually on the ownership team for this. We operated and we exited this one back in, I believe. So we purchased this in purchased this in 2018. And I think we exited this in end of 2020 or 21. But this one at the time we purchased at 95,000 a door. It's a small little complex. I don't remember, but I think it's got like 65 or 70 doors. So we purchased with 95 a door. 2 weeks after closing, and this was the 2018. 2 weeks after closing, we had an offer from the people who bought across the highway. Across the highway, there was a complex, not Brandon Oaks, not Indian Creek, Spanish Oak. I believe this was the one, somebody bought this. So they offered us 110 a door 2 weeks after our purchase on our Regency. Of course, that didn't make sense to sell at the time. So we didn't sell it and end up exiting around 2021. So now we're getting this one, and I just want to do a quick calculation. So it's 304 doors. We're gonna basically get this at 24.5. So we're getting at 80,500 a door, right? So that's the big difference. Like this one, we bought it at little over 90 a door, and now we're getting this at 80 a door.
That's a smoking hot deal.
Yeah, it is. And again, some broker brought it, last year, didn't work, and now somebody else brought it. So we kind of have to see, how this is gonna work. Both the broker who brought it to us now and the last year broker, they're saying, hey, we are owed fees, seller doesn't have money, so buyer have to pay. And we're saying, I don't have any contract with anybody, and, when I am the customer as a buyer, when we close, everybody makes money, right? We are the one who pays everybody, not directly, but more or less as the buyers, we pay everybody, right? So we're negotiating on that too. There is a, $150,000, $200,000 impact. These things add up, numbers are there, but it is a 1968 property, so that is the biggest concern for me. Older property, are we buying? Ooh, I had the number of units wrong. So let me correct it. Divided by 252. Yes, it's 97 a door. Yes. And I was really surprised. 80 a door was sounding really, really low. So it is 97 a door. So we bought this Regency back so many years ago at around that price. And now we're seeing those prices from 2018. Great way. Then this other portfolio came up. There is a single family residential portfolio of 123 houses in DFW area. The oldest house is really, really old. Initially, we were looking at it. I think it may be a pass just because a lot of old houses, very old, and these are in worst of the worst areas of Dallas. But again, we may go back to the really low offer, and if that works, then there's a potential flip, 123 flips for the next 2-3 years to kind of keep going on a schedule, on a cycle. So that's that one is there, and then we have Villanueva that is going on currently. There is this one. So in the archive in the Houston, this is the this one. So we're working this one in San Antonio. This is the 304, yeah. So 304 doors. I had my number of doors crossed. 84 bill. Looking at a refi potential option versus taking over the loan. I don't think the lender is currently willing to extend the loan or let anybody assume it. But really need to figure out the financing on this. But again, I think whatever we do on this, we're gonna go in with 100% financing of our price, whatever the price may be. So this one is, kind of building up, trickling in. From the same owner who had this, there are 3 other deals of theirs that we're looking at. Potentially they are distressed. So that one is going in and building up a little bit. I think there are a few other deals that are floating around. Let me look at the partner review here. Yeah, so Alex is looking at this, and this one needs to be reviewed. Chris, you're on this.
And Jay, I have a quick question.
Yeah, 1 second. Hey, Chris, are you looking at this one? Do we need to review this for tomorrow? Is that what it is? Who's just made it here? Chris, is there something going on with this?
Which one?
Kingswood Estates?
No, he just assigned it to me. I haven't looked
Okay.
at, I haven't looked at it yet.
Alvarado, okay.
I didn't know where it was on Friday.
Oh, it just got assigned on Friday? Okay, okay.
Yeah.
So I'll put the due date to tomorrow, so that way, we don't get this. And this is, I think Alex and them are looking at this one. Oh, you know what? We didn't get to review that yesterday, so maybe we try, oh, this weekend. We will try to do this. Okay. Yeah, Tiffany, go ahead. And if anybody else have questions, please raise your hand and, oh, Tiffany, you have your hand up. Good, okay, go ahead.
Yeah, so you mentioned earlier that, you know, one of those complexes was in a really bad area of town and whatnot. Now, some people say there's an opportunity there to improve the area if you can by improving the property or being kind of like a force in like making positive changes in the community through your property. But when, in your opinion, would it be considered worth the effort to pursue something like that? And when do you say
Yeah.
just run?
Yeah, so, you know, if the area has high crime, especially violent crime, run away, right? I don't want to deal with that. I don't want my property employees and have to worry about that. If it's low income but no violent crime, like some pickpockets, small things, yeah, fine. Yeah, but you know, even if there is some other crime, you want the premium for it, right? Or just for the premium, I'm just saying we don't say no. Violent crime, I run away. But from a improving the area perspective, like I don't go in and ever think that I can improve the area. These cycles of like gentrifying neighborhoods and areas is typically longer cycle, you know, minimum 15, 20, 30, 40 years. It happens over time, a long time. So if our deal is a 3 to 5 year cycle, we're not going to make an impact on the area. With that said, we were looking at last year 1,000 apartment deal in Georgia. And you know, it was on it was on east side of Atlanta, Stone Mountain area. And that was like, it was like 1,088 or some number of doors like that. You know, that's like a little village itself. Yeah, that's like a lot of the small towns in the US. So that one we can say, yeah, I can do some things to improve the area, but beyond that, like you're not changing the area. So I don't go into any deals thinking we can change the area, we can improve the area. You have to take whatever is there. Can you secure your property? Can you do more security? Can you, you know, fence and cameras and lighting and those things? Yes, absolutely. And but I don't have a drastic change of area. Property, yes, not area.
Got it. Makes sense. So I guess if you're passionate about the area and you want to make a difference in the community and you're in it for the long haul, then maybe that's something, but otherwise don't bank on it and just,
Yeah, you take what you're given.
Yeah.
You underwrite what you're given. Yeah,
gotcha.
Good.
Okay.
good question. Tim? Okay, Tim, you had
Yeah.
a comment also. Go ahead.
Yeah, last week when we were talking about Amber Creek, we would, you know, Soraya and I was thinking that we can, you know, do the final review on that and then get the LOI out. So once you have a few minutes at the end of this call, we can do that possible.
Okay, so I'm going to move this to LOI and offer stage. And Tim, let me make sure. You and Chris, you, Frank, Cliff are on it. So, you know, if you guys are working on submitting LOI or thinking or doing this, make the status change to LOI and offer, because then we go look at it and say, oh, there's an LOI stage deal. Do I know? Are we providing help, support? Team is okay or not, right? 3 of us, 6 of us, we do discuss and look at those. So keep that status. status updated there. And if no other questions, 1 second. So just to share the screen, I updated Amber Creek there. And now when it shows up over here, you know, it's gonna trigger the question like, oh, are we all good? Do we need anything? And all that, right? So, but Tim, yeah, we can look at this here. And let me see, Tiffany's hand is down. John, you have a question?
Yeah, so we're looking at this property in Denton. It's just about 2.5 blocks or maybe 3 blocks at the most. I mean, I was just there yesterday. It depends on how you sort of measure it. It's very close to what's called Denton Square. And this is like a really nice, gentrified isn't right. It's like a hipster central, you know, it's kind of like Austin, north of Texas here. The property, it's a sale of 2 properties, 2 different addresses. One is like a mixed where it's on the first floor, it's like these small little commercial places, like little businesses, and the second floor is residential. That's all looks good, and it's real easy to kind of do that analysis. It also has, the 2 properties, they sit on about 1.5 acres. And like I said, this is really close to some really nice real estate. And the other property, this is the one I've got the question about. It's 15,000 square feet, and it's like a single building with only like a couple entrances. And at one point, I guess it was a restaurant. At another point, I think it was part of it was a church. And it's really hard to find any kind of comps on this. I believe that building was built in 1955, but it's got like a kind of a cool look to it. Yeah, if you go south of the square there, so if you go south, it's on Elm Street. So you see Elm Street there. So you go down to 405. The 2 addresses are 405 and 419 Elm Street. Okay. And you'll see that there's quite a bit of that's South Elm Street, 405. Okay. Yeah, it's south of Sycamore there. If you just go and yeah, Locust Street is the other street that it's bordered by.
Okay, go ahead.
The 3 streets that it's bordered by are South Elm, Locust Street, and Prairie. That's it. There you go. You're looking at it right now. That's it. Yeah, there we go. So those are the units that on the first floor are small businesses. I actually was in one of those businesses yesterday. It was really cool. I'm thinking about going back there today and getting a haircut. And then you can see if you look to, okay, yeah, that's that. And those are in really nice shape. I mean, you could do some like minor cosmetic stuff. Need to still take a look at the inside. It looks like some of the units might be getting work done on them. I'm not sure about the residentials. We're supposed to get that information today. But if you go, yeah, that building right there, that building right there is a very interesting. It's 2 stories. Those are not part of the deal. That's the only thing I think is not part of the deal. There's like 4 doors there that are separate. I think that's correct. You know what I'm saying? I'm still getting details on that kind of stuff. But that building is kind of hard to replicate. It could be very cool. It's very close to the area that has all sorts of like nice shops and restaurants and everything like that. If you look just south of that building, there's like an old like used car lot with a collision shop and stuff, like a C level, you know, like C class. But the thing is, if you go like just like across the street, you're in like a good B+ property, and then just south of that is like an A property. You know what I mean, for residential, you know, for a multi-unit.
Yeah, and so
So
John, do you have financials for these 2 properties? Like T12
no, I
and
don't.
Ventral?
No,
No,
so
no.
we're getting that today. So I'm going to be speaking to the broker. So we found this deal on Saturday, and we've
Okay.
been doing the due diligence. I'm going to be speaking to the broker today. We have a list
Okay.
of questions. We're going to get the rent
Okay.
roll as well.
Perfect. Yeah. So your main question, John, is, hey, I'm not finding comps. How do I underwrite this, right? So
That's, yeah,
yeah, and mixed use, if you have businesses, retail on the first floor and then the residential on the top floor. So mixed use is a tricky one because even though it's apartments and residences, a lot of the time, I think it's like a 25, 30, 35% is kind of the threshold. And I'm saying it's a range because lenders can argue that is it based on a square footage or is it based on the revenue or the number of units, those few factors can come in to figure out what percentage of your building is retail versus residential. And if you're above certain threshold on retail, then you can't get agency loan. A lot of the lenders, banks and stuff won't do the loan. So loan is always kind of a critical factor in your underwriting because that determines your cash flow, right? And that determines what are you working for, right? Like what money are you going to get or not get? So that's why these mixed use buildings can be a little tricky one from financing perspective, and then it can throw off depending on what percentage is the retail versus residential. So finding a comp for that is very challenging. So, and the reason I asked you the first question I asked is lacking the comps, what I would do is, just take your existing T12, existing financials, and then you can have your retail, you have your current rates, you can look at where the latest lease was, and then go look for comps for the retail in that area. What is that leasing at, dollar per square foot? A lot of the times your leases will be 2, 3, 4, 5 years long. And if all of your leases on retail are, none of them are expiring in next 3 to 4 years, well, you really don't need retail comp because you got a locked in rate. So you're not going to be able to negotiate or increase that income whatsoever, right? So you don't even need a comp in a sense. For exit, absolutely, you do need some comps. For apartments portion of your underwriting, you have to go look at the residentials like, hey, what are my rent comp? What is it selling? I really wouldn't look at the sale comp of the other apartments because your financing is going to be different on your property versus the other properties. So you're not, if you go look at an apartment complex and say, hey, my apartment complex is selling at 5.5 cap in Denton. Well, yours may not sell at 5.5 cap because you got a retail component and financing is different, right? So, but to answer your question, in your underwriting, I would do two parallel underwriting. So on your actuals and unit mix tab, have your retail units and have the data for those and fill that, and have your residential units and have the current and projected rents for those, and do the comps separately for those, and let that data flow into T12, and then adjust the average rent for year 1, year 2, year 3 for both of those combined.
Yeah, so that's great, and that makes sense to me. But the kind of the tougher question is that other building, which is part of the deal. That other building is about 15,000 square feet. So that's not what we're looking at right here. If you go to the right, you'll see the building, and that's the one that's weird because I don't see anything like this. That's one huge building. It's those doors. Like I said before, I don't think those doors are included. It's on the opposite side. If you go to the east side of the building, you'll see there's a door there that is kind of the main entrance, it looks like, for the whole building. Yeah, you can see that's the south side of the building there on Prairie. There's only one door on that side. And if we turn around and look at this, you'll see the one entrance to the whole building. Yeah, that's it right there. So I guess there's kind of two entrances there, but that just looks like it's to a patio. And like I said, I talked to somebody who's there yesterday, and she seemed to think that it was a restaurant at one point, and it looks like it might have been multiple other things. It looks like there's possibly a lot of different potential units in there. So it would have to be divvied up in a really interesting way. And you'd have to find, I think like the kinds of businesses that go into that like area, you know, because like I said, this is super close. If you go to Denton Square, you'll see the types of businesses that are in there. You know, you got all sorts of stuff. Boutiques, restaurants, tattoo parlors, this, that, you know what I mean, like a hipster area. Like just think like Austin. So that's what, in order to make this deal work, we'd have to figure out a way to make that building, obviously that building is the, you know, that's the big thing. That has to work.
Yeah,
Otherwise,
yeah.
nothing else works.
So I would, it's this building here, this here, right?
I think is, yes, that's it.
Yeah. So we were
And
looking
look
at
at all
those
that
doors
land.
that,
And
Oh,
also all that land I think is included. You see all that parking and
Yeah.
everything?
yeah. So I mean, if it's a building, just like any other project, right now, all of this is vacant, basically?
I think so, except for maybe that if you go to on the Elm Street side right there, you see that last little bank. I don't know if that's included. Tosh might know that. Tosh, is that included?
Yeah,
Is the
I think-
entire building?
Yeah, I think it's all included. So, John, if you look at our group chat from yesterday, they sent a floor plan. So basically, there is 4 tiny offices on the far left, which is why you see those 4 doors. And then
Yeah, I
there
saw
are
that.
2.
So guys, bring this to tomorrow's call, underwriting call. You know, we can dive deep into full underwriting. But at a high level, like this one is, if it's vacant, then, and you're saying, hey, I have one entrance, I'm gonna create entrance here, here. Have your business plan, that your business plan is, I'm gonna create entrance 1, 2, 3, 4. I'm gonna divvy it up, I'm gonna rent it, go do the comps for retail, rental comps, you know, do some assumption in your synthesis for lease up, right? And retail is always slower than residential. So bake that in, the lease up at the market comp rate, and then see where the values fall. So it's not a whole lot different than any other lease up. But you will, it looks like there's a little extra legwork to figure out if only this entrance is there, or if city has any issues having other entrances, or maybe on that side. Looks like there may be a main entrance over here. Just looking at the
was-
roof.
I think It looks like it was an entrance at one time, but it's been sealed off. I mean, I realize, yeah, you can put more entrances in. But you got to see what, like you said, you got to check with the city. You got to see what they're going to allow.
Yeah, so I think we got.
Yeah. So you got to look at all those. But again, under your actuals and unit mix tab, you kind of add those as a separate, however many number of units. Add the rent as the based on the market comp, and out you go, and your underwriting is done. But the CapEx you'll have to build in. Whatever your business plan is, don't forget the CapEx for that. So just keep that in mind.
Okay.
Hey, good find. This looks like an interesting project. I know I've been to the Denton Square in Denton. Very charming little area. For some reason, I'm not able to figure out why, but Denton seemed to have a lower cap rates than the rest of the DFW. Like maybe Dallas downtown have comparable cap rates at Denton, but for some reason Denton has lower cap rates generally than rest of the DFW market. So yeah, I mean, building wise, if you find some distressed building and value add building, it'll be a great project. It'll be a great project.
Yeah.
And
Hey,
so
Sanjay,
make
I
sure
have a
everybody-
follow-up question on this one. So as far as holding costs, right, when we have to factor that, because a good amount of this project is going to be vacant at the time of closing, what is a healthy duration? Do you think like a year, or do you think more than a year cost?
No, it really depends on your type of property and market. So if it's a multifamily and only 24 units, yeah, maybe 3 months, right? Assuming not a big rehab needed. If it's like a 400 unit multifamily, fully vacant, well, yeah, you need to bake in year and a half, 18 months of vacancy ramp up. Retail by default, 6 to 9 months to lease each unit is what I would bake in. And on retail, you have to bake in TI, tenant improvement, at a minimum of $10 to $15 square foot. And you know, you may be able to negotiate that you don't pay those, but I would start with that in your underwriting for that. So and retail is a longer lead cycle to lease up vacancy.
Okay, so you're thinking, you said 7 to 8 months for the retail part.
Retail 6 to 9 months for each unit. So meaning if you have 15,000 square foot, I would say, you know, maybe like a typical restaurant needs 1,500 to 2,000 square foot, right? A typical barbershop may need 800, 900 square foot. A typical CPA office may need, I don't know, 700 square foot, right? So if you have 15,000 square foot, I would kind of bake in and say, I'm leasing 1,000 square foot every 2 to 3 months. I need 15 of those cycles. So I'll go from 0 to, let's just say 100% occupancy over almost over 3 years.
Right.
Okay.
So yeah, don't assume that, oh, 6 months all will be leased. You will find 1 to 2 tenants. And these are, if you're looking for an anchor tenant, let's say if you come across a property where you need an anchor tenant, like a grocery store, gym, or, you know, something like that. Well, that's a 1 to 2.5 year lead time for that anchor tenant. Because a lot of the big corporates have their plans 1 to 3 years out. So you start getting in touch, letting them know interest, and then you wait. If it's a bank building that you're buying, that there was previously a bank, so you know the teller was set up and drive-through was set up, and your business plan was to buy and find another bank, then you know everything is in place already. So maybe it's a 12-month lead time on a vacant bank to a bank new tenant. Like close to my house, there used to be a BB&T bank branch, and they had some shift and they left. And there was a Chase branch next to it that I used to go. So then I was like, oh, BB&T moved out. Let me see how long it takes for the next tenant to come in. So I'll kind of go keep an eye. And I was tracking it, and it took them exactly 11 months to actually have another bank sign go up. I don't think the new bank was operational for another like 5 months because they had to do the TI and their own branding and signs and all those things. Yeah. So when in doubt, add more time in retail is basically I would say.
Yeah. Okay. That's helpful to know. So probably around 3 years is what we should.
3 years for 15,000 square foot.
Yeah. Okay. And then part of the exit we were thinking was it's 2 properties that you have to purchase. Like they won't let you buy only one building. So maybe once we finish the project, we can always split it into 2 and then sell it as 2 separate properties as well.
Yeah. So you can separate the parcels at just check with the title and the county. Make sure no issues. Make sure no issues with that.
Okay.
Looks like this is like a radio station there. I don't know what they have this year. I was looking if there was a phone tower or cell tower or something, but looks like it's a radio
I couldn't
station.
tell what that was. I thought it was like a little ice cream shop or something weird. I don't know what it was. It was right there.
Yeah,
Sort of
maybe based on this, it looks like it's a radio station.
Oh,
And that's what it says, the KUZU 97.9 FM. But by the way, it's amazing what you can learn and find out by when you start walking on Google. I have a lot of fun. And one of the things to note is as you walk, you will notice the picture time, right? Image capture is December 23. So John, when you were there, this may not be there, but this gives you a view into the history of what there may have been there. So now it may be, oh, look, no, okay. sometimes when you walk in a different view, it'd be a different picture. It is still a December 23. So sometimes you will see, it is still a December 23 picture right here.
Okay.
But it's like a little CSI. So I love to go through and do this and this. Okay, good. Hey, Tim, let's ask, go through your, what question do you have on your LOI?
So I think we underwrite the property at 8.5, and then the loan balance is 891. So last time when we talked to Syria, he think that it's not going to happen. So he want to go back and, you know, review the, you know, assumption and numbers in the underwriting to see if we can make it to 9.1. Otherwise, you know, he doesn't think the bank will take the cut.
Okay, okay. Let me let I'll let Shrar know, and we'll ping you and see what we can do with that. Okay.
Okay.
Okay. Hey, Jason.
Oh, well,
Did you
yeah.
you had a hand up? Yes.
Yeah, I didn't want to interrupt y'all. So I'm from Denton, and that property actually really excites me, because Denton has a lot of character. There's a reason why it sells for very low cap rates, because it has a certain magic that other places just don't have. It's a college town of 2 universities, and the rich character of the town square, which the square that's only a couple of blocks north of this property is like the gem of the whole town. And you're like within a walking distance, or short bike ride away from the square, which is just a huge hub, and everybody wants to live and socialize around the square. You know, in the last 15 years, it's really exploded. And so I would imagine that that rents would be premium on the apartments there, and would even like afford like the most premium upgrades to get the high rent because of the location. Also, that commercial building, that used to be my favorite restaurant back when I was like a kid in the 90s, like late 80s, 90s. And it's gone through, the restaurants have moved around, and now that building is I guess is vacant again. But I spent the past 18 years living in Austin, and I can see there is definitely a parallel between what happens in Austin and then what happens in Denton, because it's that same kind of youthful college kid, young professional energy, and musicians and so forth. What I would do with that property would be to see if I could mirror a business that was something like Boland Acres in Austin, which is known for its pickleball courts and like a open kind of ice house feel. So they use not only the building for a bar and recreational area, but you also have the adjacent parking lot being used for pickleball courts and outdoor seating, and dog-friendly places. So you could easily probably make that into like the hip new destination right off the square, for pickleball and outdoor patio seating and bring your dog kind of vibe. And throw some, and I would probably not do little small businesses like insurance sales or whatever was on the side of that building, because that doesn't really take advantage of the hip factor of where you're at in that area. And
Good.
so
So connect, yeah, John and guys connect with Jason. Looks like he's got some good experience,
yeah,
and
absolutely.
knowledge and ideas. So
Yeah,
teamwork.
and Yeah, I would love to, if this deal pencils out to maybe cash flow, like while you reposition it to, to adding, some additional cool stuff to up the rent. I mean, I'd love to be part of, that team because I have lots of friends and family that I'd love to go and visit in Denton, and I know Denton's culture, and I'd love to, be part of a deal that pushes Denton to another level. But yeah. So just anybody on that team, I'd love to holler at you. I'll put my number in the chat.
Sounds good. All right, guys, we're way past 10 o'clock. Appreciate everybody. Good discussion. And we'll see you tomorrow morning. Thank you, guys. Have a happy week.